And like the meme says, the internet remains undefeated, man. So when so many people know about something and they know it could be an awesome financial opportunity that will never happen again, and it will never happen again because they're putting these rules in place so it doesn't happen again. But when people see an opportunity like that, they jump at it, man. They jump at it like it's like they're the 49ers searching for gold up in the Bay Area. It's like a gold rush. It's like a 2021 gold rush right now.
Hi everyone. Before we get started, I have to plug a few quick things. First of all, my book, Brexit, the Establishment Civil War, is now available to order. You can read some chapter previews by following the link in the description below. Our sponsors, ExpressVPN, get 35% off 12 months of ExpressVPN and get 25% off podcast hosting with Podium. Finally, if you're watching this on YouTube, please go check out odyssey.com instead. We are hosting all our videos there. If you're a creator, you can move your videos across with one simple click, and you can earn cryptocurrency simply by watching videos and use it to tip your favorite creators like myself. So please check that all out if you want to support the show. Anyway, here's the podcast. Hello and welcome to another episode of Chatter. Today I'm talking to Jackson Hunter, who is a musician, YouTuber, and professional AMC enthusiast.
Yes, sir.
So man, thanks for agreeing to chat to me. Before we start, I have to plug two things. First of all, my book, Brexit, the Establishment Civil War, you can check that out in the description below. And our sponsor, ExpressVPN, you can get 35% off 12 months of ExpressVPN by following the link in the description below. So Jackson, one of the interesting things I found about you when I first started spotting your videos on YouTube talking about AMC and investing was that initially your YouTube channel was started and it was all music. So when did you start that? And was it always, or was it initially destined to just be something for you to post like gigs and concerts and music and stuff on it? Or did you, envision becoming the prophet of the short squeeze?
No, not at all. It was the former. I've been a musician since I was 10 years old. I'm 29 now, and I started my YouTube channel in 2012, so over 9 years ago. And like you said, I just posted music and live concert footage and like behind the scenes vlogs. And if I would play like South by Southwest, I would post that footage. And I was just constantly churning out content and music videos. And it's so funny. I put so much time and effort into that stuff, and it only got me to 127 subscribers. And then one night I just put an AMC stock analysis out. I didn't even think much of it. Honestly, I was making dinner and I was like, I got 15, 20 minutes. And I whipped this thing together and I put it out, and it just got a lot of traction. And it got like 6,000 views in the first 24 hours and like 150 subscribers. And it was just a no-brainer. Like, of course, I'm going to do this every day. And then it's been growing my channel like insane. In February 27th, I had 127 subscribers, and now we're at over 13,000 in a matter of a couple months. And more than that, it's just like my community is so engaged and they're so positive, and we're all like-minded, and we just want financial freedom. So it's not so much like, yeah, I have a YouTube channel that's growing. It's like we have a community that really supports one another, and it's a beautiful, beautiful thing.
No, the community is something I'm absolutely fascinated by, and I want to get onto a little later. But what first brought you to AMC? Like what brought it across your radar? Like, why did you decide to make a video about it?
Yeah, I have been trading since October of last year. I started out trading options contracts, and I learned a lot. I had a couple of mentors that taught me all about technical analysis, fundamentals. So stocks move on three things. They move on fundamentals, how well a company is doing monetarily. they move on technical analysis, and they move on breaking news. And so I was just learning the game from my mentors, and I had to pay my tuition. I lost a couple $1,000s starting out, as everybody does when they play the market, unless you're just completely lucky. But I started. I'm by no means an expert. I'm by no means a professional. But I started trading in October, and then once January came around, and we had that baby squeeze, but then they stopped it. They called a timeout. It was one of the most unethical things I had ever seen in my lifetime, and it was just so blatantly obvious that the little guy was making too much money, and the 1% couldn't handle it, and so they called a timeout. And it was just like, man, that was so shady. And I'm a pretty passionate person, so that is when it really caught my eye, because before that I wasn't playing AMC and GME, and then I just started researching AMC and GME and all the Reddit stocks just day and night. And they don't move like other stocks. They don't move like a traditional Apple or Microsoft or Coca-Cola or McDonald's. They don't move like that whatsoever. They move off of internet trends. And that's something that the hedge funds don't realize the power of. Like, it's an anomaly that the traditional investor has not seen these internet trend driven stocks. And so that's why they're so confused that when they short it and they create some artificial selling pressure, we just buy up the dip, and we gladly buy up the dip. And you look at any other stock on the market, nobody does that. Like, if a stock dips, people typically get out and they find another play to play. But we understand how shorted this thing is. It all comes down to, it's shorted so much, and it's shorted through leverage. It'd be one thing if they were shorting it with money that they had, but they're shorting it 10 times over, and they borrowed money from banks that they haven't paid back. And so it's just a no-brainer. They have to buy back the shares at some point. And who owns the shares? The retail shareholders. That's all it is. So to answer your question, when it happened January 27th, when the brokers pulled the plug, I was just like, man, that was not cool, and that is not indicative of a free market. And everybody like came together as a, not even just in the United States, all over the globe. We have investors all over Germany, UK, Mexico, Australia, everywhere. And it's something. Yeah, go for it.
I was just gonna say Korea.
Yeah,
they joined us.
Taiwan, all over. And so I just saw something that was so blasphemous to me, not in the religious sense, but just like, man, like that is so crooked. And I heard a great quote on Twitter about it. The mask slipped off a little bit that day, and we got to see the inner workings of how the financial market actually works. And I was appalled. And so I just dove in head first with the research.
Now, I want to get to that, the shorting it on leverage as well, and try and get you to maybe explain a little bit of that. But I find it so curious that you're identifying the same thing that I did, and that it's something I'm writing about at the minute, is that the fact that the mask really slipped is the right at the end of January, 1st of February was the first moment where I'd seen the chasm between like what was happening in reality and what the mainstream press were reporting was so unbelievably huge. Like I was sitting on Reddit, like looking at the top post, the front page, and it said like, don't buy silver. This is the distraction. They're trying to take you away from GME and AMC. And then like you'd open my news app and all of the headlines. I've got like a sheet of about 20 headlines, and it's just, you know, GameStop's over. The Reddit crowd are going for silver next, or SLV. It wasn't even silver. It was SLV, a company associated with trading silver. It wasn't even the commodity itself. And someone actually really interestingly pointed out that the reason that it might have pushed silver, now this could be just coincidence, would be because there's an idea that a lot of these communities on Reddit are being tracked. And people will often say, thanks for the silver. And therefore, it's one of the most used words. and they suggested that that was the reason that hedge funds picked up on it and pushed it. Now that's obviously just a complete like wild out there theory, but I find it interesting.
Dude, I had not heard of that. That is hilarious, but it makes total sense.
Because similar things have happened. Like, for example, there was there was a whole bunch of bots. I've seen posts where there was people spamming SSR, but as if it was a stock, not the short sale rule. And it's again clearly a situation where things have been tracking the posts and the comments, picked up on the fact everyone keeps using SSR, which is an obscure, like Vancouver-based mining company that is known as SSR when it trades on the Australian Stock Exchange. So yeah, so there's no way that this has just randomly been picked up by a whole bunch of Redditors, and then you have to ask yourself where they come from. And
yeah,
it's been so weird to watch this like weird online battle. But the reason that I think we've been at least somewhat successful is the community. Like, what do you think is what's holding that community together? Because I've been trying to work this out. Like, what is driving the community itself? Because normally people get bored, they move on from their fads. Like, even QAnon is finished, you know, apart from the real believers. So what is it that's, you know, keeping the apes interested?
Yeah, that's a great question. It's the hope for financial freedom. So I can't speak on economies outside of the United States. I know very little about that. I'm just a simple ape. But in the United States, the middle class has been wiped out. So we have 30 rich guys at the very top, and they own more wealth than the entire bottom 99%. So there is no middle class in America. And I'm sure there's guys that would love to argue with me about that, but I've seen it firsthand. I've struggled my entire adult life. I've worked 3 to 4 jobs and still coming up short on rent. So to answer your question, it's people are so passionate because they see promise of a better life through gaining financial freedom through AMC and GME and the rest of the Reddit stocks. And I 100% believe it's going to happen. You couldn't show me any piece of evidence that would prove me otherwise in my conviction. So people are so passionate. So it's that hope of a better life, of financial comfort and freedom that Americans have been struggling with, and people around the globe too have been struggling. And so it's like, once you get that financial monkey off your back, then you can really enjoy life. And it's like, for my entire adult life, I had to put off so many things because I was working 12, 14 hours a day. And then when you get home, you're so tired, you don't want to do anything. And so there's a better way. And these 3.2 million shareholders in AMC, we see that better way on the horizon. And I don't think it's too much further away. And then on top of that, we also just want to level the playing field. Like, we're not asking for anything crazy. We're just asking for a free and a transparent market. The same way that, most casinos are less rigged than the market is right now. And that's like, it's laughable, you know? It's too early in the morning for me to laugh, but it's laughable, you know? And so people see this as a way of getting financial freedom, or at the very least financial comfort, and hopefully it brings back some semblance of a middle class to America, because that's been wiped out in the past 2 decades. Back in the 70s, 80s, 90s, you could work one job and it didn't even have to be a super high paying job, and you could save up for a couple of years and buy a house. Now if you try and do that in LA, and I've lived out of my car, so I'm a walking example of this. And I'm no like outlier to this. Many people have like tried to come to California and like make their dreams come true, and they end up homeless because the cost of living to what people are paying you is just, it's upside down. It's nonsensical. And then also on top of that, people got enraged by what happened in January. Like, how can you call a timeout? It's like the 49ers being up 55 points in the fourth quarter against the, let's just say the LA Rams. And then the LA Rams call a timeout and the refs completely flip the rules. And now the Rams are up 200 points to 0. It's like, it's so unethical what happened, and the fact that they did it right in front of us, not even trying to hide it. And then the CEOs of some of these brokers were just talking out of their rear end, trying to make up some story. But then it all came out as it was all lies. It wasn't a collateral issue whatsoever. It was nothing like that. It's because Citadel owns the market for flow orders, so they get customer data from Robinhood customers. So, and then also to speak on what you're talking about earlier with the journalism, dude, almost nobody has. I think you do a great job with integrity with journalism, but most journalists these days are trash. I'm going to speak honestly, and they just post whatever will get people to click on their click on their article, because if people don't know out there, the viewers watching, you get paid by how many times somebody clicks on your page and then they click an ad. It's called cost per click. That's how article writers get paid. And then on top of that, it gets more crooked than that. You get organizations or hedge funds or family offices that will pay article writers to drag a stock through the mud, and they'll say 5 reasons not to buy AMC, and AMC is going to 1 cent. It's all, everybody knows at this point it's all BS. And then I found out the other week that MarketWatch, Citadel has a $100 million stake in MarketWatch.
No way.
No, I promise you can look it up. It's on Wikipedia and it's on Fintel. Citadel owns $100 million worth of MarketWatch. So of course they're going to say bad things about AMC,
Yeah, that makes so much sense. I will splice in this article that I'm having a look at for anyone that wants to look here, and I'll put the link in the description below. So I also want to point out that that's not 100% true on all the journalists. It depends where you work for. Some will pay per click, but the outlet itself is getting almost all their revenue based on the clicks. So it is literally in their best interest to post whatever they can that will make people click. And for better or for worse, unfortunately, that's the way that the industry works now. But I wanted to go back a little bit, and we can just for people who have maybe been focused almost primarily on GameStop. What happened with AMC then at the end of January with the baby squeeze, the trading halt, and what made you hone in on AMC as well as GameStop? Because a lot of people, their portfolios are just GameStop 100%. Only diversification is the different platforms they've got that on. So why AMC and what sort of happened there that you've been watching the story? So before we go into what's going on now.
So I got into AMC because the stock was cheap. When I started covering it, it was $8 a share on February 27th. And so it had easy accessibility. I don't come from a lot of money, so I didn't have the money to buy the GameStop shares. They were, 5 times the amount of AMC shares. So it's the accessibility. You can buy a lot more shares, and GameStop has already had a huge run. They were what, $5 or $10 back in December, and now they're trading at around $150 a share. So I'm not saying GameStop's not going to squeeze. I wholeheartedly believe GameStop is going to squeeze too, but I believe AMC offers more bang for the buck. And so that's why I jumped into AMC, and I have shares of AMC and I have call options for AMC, and I am 100% sure that I'm going to bank on those. And then just the other week, I had some extra cash, so I picked up 2 shares of GameStop because I know that's going to go stupid high too. But to start out, I just didn't have the capital, and AMC was trading at $8 a share. It's a no-brainer, especially when you know that it's the #1 movie theater company in the world. That's not an $8 stock fundamentally. So even if people want to have that fundamental argument, it's a moot point. It doesn't make any sense. Because if you look at the chart on 2015 and 2017, it was a $36 stock. And then you got movies coming out like Fast and Furious 9 and Mortal Kombat and Kong vs. Godzilla that did $500 million in box office. And the summer's coming around. So you can't even have that fundamental argument anytime. The only reason why it's trading sideways and not going to triple digits is because it's so heavily shorted through synthetic shares in the billions.
The billions, right? Okay, well, let's get into the sort of technicalities of what's going on then now for people. So I was looking last night and earlier today, just before we've been recording here, that I've seen suggestions that the interest charged on short selling, not the short interest, is somewhere between either 70 or 149% right now. That's the interest rate that people are charging to lend out the shares. If I've understood this correctly. What on earth is like? What the fuck? That seems like I have never seen, like, even those rip-off payday loan ads that they're like, oh, 39% APR, and you're like, pooh, you're getting screwed there. And this is way more than that.
Yeah, man.
What's happening?
I used to get by on payday loans. Speaking of that, and those are a total ripoff. But I'm looking at it right now. I've got iBorrow desk up. Yesterday, it jumped from 26% all the way up to 70%. It almost 3x in the matter of one day. And I've told my viewers this many times. That short borrow fee rate, it's an APR, just like you said. That number can jump very quickly. And so right now, it's according to iBorrow desk, it's at 78.7%. That is ludicrously high. And for anybody to take a short position with that high of an APR, you've got to be out of your mind. And there's only 3,000 shares available. That's basically zero to be lent on this, according to this website. Now, like you said, that's just one of the brokers. So I believe they take their information from Interactive Brokers. But I saw on Ortex's Twitter, on some websites, it's as high as like a couple 100%. And that's an APR, of course. That's not a daily. But yeah, you'd have to be a fool to borrow shares to short it at this point, especially knowing the community that we have, and we're buying and holding, and we're not going to sell until we get a very high number.
I've just taken a look there. Trey's Trades are reporting that someone is saying that the interest is currently at 217%, which is insane. I saw sometimes the numbers here I can't quite get my head around. But so you've talked a little bit there about the use of synthetic shares and short ladder attacks. Do you want to give people just like an idea of how that works to push a price down, and how legal that actually is?
Yeah. So synthetic shares, it kind of doesn't really make sense, but it kind of does make sense. It's like a paradox. A synthetic share is made out of thin air. They don't really exist, but they do exist. Like, for example, probably all the shares that I own are synthetic. And I'm fine with that, because a share is a share is a share. It doesn't matter if it's synthetic or legitimate. It still has to be bought back by the people that shorted it. And I believe they shorted our entire float 6, 7, 8, 9, 10 times over. So the entire shares available to retail traders for AMC is about 400 million. I think they added like 17 million recently, but let's just call it 400 million. So if there's 400 million shares available, there is no way that we didn't buy up all those 400 million within the past couple months. There is no way, because some of my viewers own 50,000 shares, like multiple of them have $500,000 in AMC. And I'm on a relatively small YouTube channel. So you can just extrapolate that with, and there's 3.2 million individual retail traders. Adam Aaron said it the other week. So if there's 3.2 million, let's just say the average shareholder has 500. I think that's conservative. Some people might think it's not. But in either case, let's just say 3.2 million times 500, that's 1.5 billion shares. How are there 1.5 billion shares, but there's only 400 million? Supposedly, there's only 400 million. That means that they shorted this thing at least 3 times over. So that means retail traders own actually 300%, as opposed to what they tell us, which is We own about 80%. So a stock like this, where people buy and hold and buy and hold at every paycheck, there's no reason for it to be trading sideways other than they're creating shares out of thin air. And it's something that has been going on for decades in the stock market, and is just now coming to light in the mainstream because everybody's doing their research and they're passing it through the interweb. And I don't know if it's legal or not. I don't think it should be if it is legal, but like, it's the same thing. I made a perfect analogy the other day on my Twitter. If I were to print out counterfeit money at my house and then go to a department store and buy a bunch of TVs, if I were to get caught, I would get arrested and go to jail for a felony. These people are printing out counterfeit shares, which have the same monetary value, if not more, than a US dollar bill. If you're talking about inflation, the US dollar bill is just tanking. But these people are counterfeiting shares. That's the only difference. And they're counterfeiting shares to create this synthetic selling pressure to try and scare retail holders out of their positions. But none of it's worked. None of the threats have worked. None of the bogus bot comments have worked. None of the articles have worked. They thought the 500 million share dilution that AMC was considering was going to work. That was taken off the table. So they really have nothing to try and snake their way out of this.
Yeah, I mean, the nothing working is I think whatever's happened in this whole saga, I have been conditioned weirdly to this point to now think, when I look on my portfolios, like for example, I was looking at the crypto I've bought in the last month or so, just like little small investments, and in the last couple days, it's almost all in the red, which is fine. This is not me like playing short-term things. This is just like me putting some money away for the future. But when I see the red, it doesn't faze me. It doesn't even bother me. Like when I see it green, I'm like, woohoo. And when I see it red, I'm like, oh, time to buy the dip. Like,
yeah,
it's like there is no bad news here. But
yeah.
So what are some of the indicators that you're looking at because you seem very certain that AMC and GME will squeeze at some point, the extent to which we can't say. With GameStop, at least I've heard 17 million is now the floor. I don't know, don't quote me on that. But what is it that you're looking at that makes you so confident? Like what indicators and what metrics and things are you looking at more specifically?
The amount that it's shorted 3, 4, 5, 6, 7 times over the entire float. That's astronomical for anybody watching this. That's not normal for a stock to be shorted that much, because for everybody watching, they started shorting AMC when COVID hit in America last year. And they thought, oh, it's a movie theater business. Of course, it's going to go bankrupt. That's what they were hoping for, because when you short a stock and it goes bankrupt, you don't have to pay any taxes on it, and you never have to buy back those shares, and you can make a killing. But at the same time, shorting a stock is the most risky thing you can do in the market, because it has a finite potential of profit and it has an infinite potential of losses. That's why shorting is only done by people with hundreds of millions, if not billions of dollars. But guess what? They made a bad bet and it backfired. They didn't realize how strong the internet community was. So why I'm so certain on it is because the extent to which it is shorted, which is astronomical, the extent to which people buy and hold this stock, which is astronomical. It's the hottest commodity on the market. It's like Supreme brand clothing, or I don't know what you guys have in the UK, but like whatever the cool clothing is, you know, that's what it is. It's like the limited edition Yeezys when they come out. That's what AMC stock is, except they just keep making more of it synthetically. So, and then the third thing, really the main thing, is the regulations by the SEC and the DTCC. They have put in a dozen new regulations in the Federal Register within the last 2 months. To my knowledge, they have never put in rules that feverishly in their entire existence. And then you got Gary Gensler coming in, and he's cracking down, man. He's tired of it. Maxine Waters is tired of it. because when you're over leveraging and you're borrowing money from these banks and you're not paying it back, that throws the financial equilibrium off balance. And it's the same thing that happened to the 2008 housing market crisis in the US. It's too many people borrowed money that they didn't pay back. That's the bottom line. So to answer your question, it's this stock is shorted like crazy and people are buying it like crazy. And then thirdly, we have these regulations that are coming into place that are going to protect the good actors, and the bad actors will have to pay for it. It's as simple as that. When you short a stock, you have to buy it back at some point. And so it's just a waiting game. But here's the thing. When you go long, you don't have to pay interest. You only pay interest when you go short.
Yeah, it's costing them every day. I think what's the meme? So we can stay retarded longer than they can stay solvent, I think is the one. It's the being held up by Malachi, the Futurama dude from When Bender Becomes God. I love that episode. But yeah, it's great. So how familiar are you with the regulations and what they've actually sort of legislated for here? Could you give us like a little more detail on what the new rules mean?
Yeah, for sure. So the most recent one was 801. Let's see. 801 was passed, and that was huge. And then 002, we're waiting on that getting passed. It was extended last Friday for another 45 days. I don't think it's going to take the whole 45 days to become implemented. And then 006 came out Friday. And 006, it's a 109-page document. It looks like a professor is grading an essay, like an English paper. It's just changing like lowercase to uppercase and like acronyms from longer titles and like spelling and grammatical errors. But if you look at page around 70, I believe, it talks about how these governing bodies, the SEC, the NSCC, the DTCC, will no longer have to give you 10 days notice before they start implementing a rule. And they're doing that because they know what's going to go down, man. I know what's going to go down. You know what's going to go down. The government knows what's going to go down. And they're going to love taking our tax money. And I'll be fine paying it because I'll probably make a couple $1 million off this thing at least. So we're waiting on the main rule that we're waiting on is DTCC 2021-005. But the fact that 801 was passed was huge because 801 and 002 from the NSCC, that talks about liquidity requirements. And that could give a regulatory body like the DTCC or a bank could call up a hedge fund and they could be like, hey, we know, they'll call up a hedge fund and they'll be like, hey, we know you're shorting this stock this much. We know you're over leveraged. We're going to need to see the collateral on that. Collateral is the amount of money that short position is worth. And I would bet my last dollar that these hedge funds don't have that money on them. So that's why you're seeing these corrections in Bitcoin and crypto. It's because they're liquidating all of their assets. And so they're trying to get ready to pay for it. But in all honesty, they're not going to have enough money. So the DTCC's trading computers are going to step in and they're going to have to pay for it. And it's not going to be a person with a logical or rational mind buying back shares. It's a computer. It's a computer that starts from the lowest sell limit and goes all the way up to, like you said, potentially GameStop could be bought for 16.5 or $17 million. And so these rules basically are giving these hedge funds and these family offices less time to do their shenanigans, and they're cutting off loopholes because before you only had to show a certain amount. Before you only had to have, like, one of the rules said you only had to have $10,000 down to, I believe, to like short a stock. But now that rule is you have to have a quarter million. And then one of the rules is you have to have the entire short position, the monetary value of it. And if you don't have it within 60 minutes, you're going to default. And that's called a margin call. And then that goes straight to the DTCC because you as a hedge fund don't have the money to pay for that. So the DTCC is going to have to pay for it by the members that pay into it. I learned a lot of this from Houston Wade. He's a genius. And they're the members that pay into the DTCC are really going to have to pay for it at the end of the day. And if that's not enough, the mint is going to print more money, which is no big deal because the mint is printing millions of dollars as we speak.
Yeah, I mean, there's something like a third of all dollars have been printed in the last like 14 months. It's absolutely stupid. You mentioned earlier that a lot of the shorts had been bought on leverage. Could you go into a little more detail there?
Yeah, so they borrowed money from banks just like you would
Can
getting a
you see
mortgage
this?
for a
Is there like
house.
somewhere you can see this online that you've seen? Is it like level 2 reporting, or is it like where do you find that information?
So that's a good point that you bring up because Gary Gensler, when he was on Squawk Box last week on CNBC, he talks about how the problem is the lack of transparency and then the over leveraging. And so back in the day, I'm talking about like any time before now, May 11th, you didn't have to really report on all of your short positions. You could, and that's why I'm guessing on how many synthetic shares there are because it's not really public. Dude, if it was publicly reported, people like might riot in the streets. It makes no sense. So, to my knowledge, there's no real website or like public data that shows the exact amount of short positions. But I do know, especially with the Archegos blow up that happened a few weeks ago, they defaulted on $20 billion and they were over leveraged to like a factor of 10. So they borrowed money 10 times more than they had from a bank. And when that was found out, the bank got fed up with it. What was it? Nomura or Credit Suisse? I think it was Credit Suisse, maybe. And so these banks are getting fed up with it too. And so that's the thing. They want to increase that transparency so people know what's going on. Because I'm a retail investor. I should be able to know when a hedge fund shorts a stock 300%. I should be able to know that. We have all the data in the world, but I'm not allowed to know if a stock is shorted that much. Like that's insane. That totally tips the odds in the favor of people with hundreds of millions and billions of dollars.
Mhm.
So I'm going off the speculation with the synthetic shares, but it would have to be in the billions for this stock to trade sideways this long.
Hmm. It's when you have those areas of the world where there is like such opacity, it becomes very easy for, at the very least, immoral and at the very worst, highly criminal things to go on. And this is one of the arguments, obviously, for like a decentralized blockchain based financial system, because it would all be out there and transparent. And I'm actually watching a lecture series from Gary Gensler, which I will link in the description below, from when he was at MIT, all about blockchain and cryptocurrency. So if you're curious as to where his head is at, I find it really fascinating to listen to him. Like, obviously he's just teaching, but you still get a sense of the way in which he looks at finance and crypto and blockchain and the world. And it's a really interesting sort of little insight. So when you talk about we talked about a lot about how kind of broken the financial system is. Like, do you see this resulting in some sort of massive reform? Do you see this kind of hedge funds versus the internet battle continuing in a way? And like, is this what always has happened between hedge funds, and we're just getting a glimpse of it now? You know?
Yeah. Yeah, it's a good question. To my knowledge, this has been going on for decades. The over shorting and the over leveraging, but there's certain people that are in bed with other certain people, and so it's like it's all politics at the end of the day, and people get paid off, and all sorts of borderline illegal activities happen behind the scenes that we're not aware about. But I do believe that we are going to come into a freer market with more transparency. And I have full faith in Gary Gensler and the SEC. They wouldn't put a dozen new rules in the Federal Register if they weren't serious about it. So, and also, everybody and their mama knows that if you short a stock with that kind of leverage, you are putting the entire global market at risk. a lot of these lawmakers and politicians, they want to make it seem like the gamification of brokers is the problem, and the way that the Robinhood app looks like a video game, that's the real issue we should talk about. No, they're completely beating around the bush. Their issue is people with so much freaking money are over leveraging, and then the 99% doesn't have a fighting chance to make a dollar. You know, you could argue that, yeah, you can play blue chips till you're blue in the face. You can play Apple, you can play Microsoft, you can play Nike, and that's a pretty like straightforward system. But these stocks that are shorted and then they didn't go bankrupt, and now these guys are doubling and tripling down, man. And then you're not even being transparent about it. It's like it's not a level playing field. It's like a professional football team playing a bunch of middle schoolers, you know, at that point. So I do see us coming into a freer market. I do believe America is a wonderful country, and I do believe we have a free market to an extent. And we've all seen where that line has been drawn. We all saw it in January. Heck, we saw it last Saturday when Dogecoin was dropping 30-40% in the matter of minutes, and nobody was allowed to sell. You know how many people lost millions with that? Like that was criminal in itself. But I don't know why anybody would still be in Robinhood at this point.
I mean,
but
we're doing them a favor, like stop them paper handing on Dogecoin.
I mean, man, they didn't let them. How can you not let somebody sell? It's especially if you're on a cash account. If you're on a cash account, then you already paid for that, and that's your money. But it's like, dude, it's the same thing with the banks. The banks are pretty crooked too. If you want to talk about another subject, I mean, I guess that's another talk for another day. But the banks, when you put your money, maybe it's different in the UK. I'm just speaking on the United States. But when you put money in a bank, in a checking account, they lend out your money to the factor of 10 to other people. And that's how they make money. They make money on interest on loaning out their money. Like, how do you think a bank stays in business? I'm speaking rhetorically right here. It's because they lend out your money. Say I have $5,000 in my checking account. They're lending it out to the tune of 50 grand to all sorts of people. And then they charge those sorts of people per an APR, a borrow rate. Same thing we're talking about with shorts. So that's how banks make money. And it's crazy. When I learned that recently, and when I learned that, I'm like, dude, I don't even know if I want to put my money in a bank, to be honest. I'd rather just like, I don't know, but you kind of have no choice, really, right? You know, so sorry, sometimes I can just like get talking a lot. I'm a very passionate person.
The fractional reserve banking thing is definitely, if anyone doesn't know what fractional reserve banking, it's actually worse than what you've described there, Jackson. It's they will like say you deposit, like, for example, say $1,000, right, in your bank, and they can go, oh well, we'll just loan that money out. So they can loan it, they can loan it out, and they have to leave 10% in the deposit of what they've loaned out. So they can loan out 90% of that. But then when they loan it out to someone and then they put it back in the bank, they can loan out 90% of that. And then it's just like the synthetic shorts. It's just artificially created money that they're able to fabricate. And it's, I don't know, people can tell us in the comments, but I don't know if you felt this as well, but it's just like I've suddenly realized that most of the financial system is based on utter fraud and bullshit. And like, not that I didn't think that before, but to see it laid out in the way it has been over the last few months has been a really stunning revelation.
Definitely. Yeah. And the reason I think that the retail traders are going to win with this Reddit stock situation is because the hedge funds gravely underestimated the power of the internet and the speed at which information travels. Like just what we're talking about right here, we might educate some people on these issues, and this information is going to get to them in a nanosecond. And so these hedge funds, dude, they had no idea that people were going to make YouTube channels and Reddits and Twitter posts and Facebook and TikTok, and the list goes on and on. and then you got Chance the Rapper is hosting his concert at AMC theaters, and the next UFC fight is on Saturday. That's being hosted at AMC theaters.
Yeah, right.
And Justin Bieber just reposted it, and it's just like they gravely underestimated the power of the internet. And like the meme says, the internet remains undefeated, man. So when so many people know about something and they know it could be an awesome financial opportunity that will never happen again, and it will never happen again because they're putting these rules in place so it doesn't happen again. But when people see an opportunity like that, they jump at it, man. They jump at it like it's like they're the 49ers searching for gold up in the Bay Area. It's like a gold rush. It's like a 2021 gold rush right now. But I don't even know how there's still shares available to buy. Like when I get paid next week, I'm throwing at least half of my paycheck into AMC and GME if it hasn't swozed by then. But it's like, dude, people just keep buying it up. The shares have dried up months ago, and everybody knows that. We're buying synthetic shares. There's no way we hadn't bought 400 million shares in the past 3 or 4 months.
Yeah, it's going to be interesting. Like, because the volume has just been pitiful low over the past couple of weeks. Like compared to again, I the numbers wise, I only know one about GameStop really specifically, but and maybe you can speak to AMC. But for example, in the middle at the end of January, in the baby squeeze, as Houston Wade has called it, which I love that people are adopting that. Because I've started using it too, and people look at me and like, "What do you mean the baby squeeze?" I'm like, "Yeah, because it's the baby one. It hasn't happened yet." But the volume was like about 70 to 100 million shares per day of GameStop being traded at the end of January, and it's been around 3-4 million a day the last week or so. Like there's nothing like comparatively, and it's like we're all hanging around to kind of wait for it to blow up. Do you know what I mean?
Yeah, definitely. So it's the same thing with AMC stock. On January 27th, the volume was 1.25 billion on the day. That's like insane. It makes perfect sense because it was shorted so heavily. And when you buy it back, that causes the short squeeze. And that's why there's so much volume. But it's the same exact thing. If you look at GME and AMC, keep in mind, they're in different sectors. I'm sure you're well aware of that. A different sector stock should not look identical to another stock in a different sector, but yet they're identical. The charts on a daily chart, on a weekly, whichever way you want to look at it, they are identical.
Yeah.
And it's
what is happening there? That has baffled me more than I can even. I have found no one who has any idea, like a legit, reasonable explanation for why that has happened. Have you come across one?
Oh, until now, it's all dark pool. So when we buy shares when we buy shares, they send, I believe it's like when we buy shares, they send a lot of those orders through a dark pool. A dark pool, it's not as like devious or like crazy as it sounds. It's just an off-market exchange. So you're not actually dealing with the straight up New York Stock Exchange like you would in a traditional buying sense. If I were to buy a stock of Apple, that would go through the NYSE. But now if you buy a stock of AMC, they're rerouting it through dark pools. So that volume is not accounted for. So what we're seeing is only a fraction of what the actual volume is. And they're making it look like that on purpose. They're making it look like this stock is going down the drain. But no, it's all being rerouted through dark pools. And dark pools are a legal thing, but they're changing the legislation on that as well. So I think they want to block off dark pool trading for a lot of them pretty soon, because it's one of the loopholes that they've found to artificially manipulate a stock in the way that it looks. Like I'm looking at it right now, we have 35 million volume on the day, but if you go back like a couple months, we were trading well over 100 million on average. And so, yeah, the answer is they reroute our share buying to dark pools.
So why does that mean that the two stocks have been so correlated? That's the part that I find really curious. I get that they're trying to route them through the dark pools in order to keep the retail investors buy orders off exchange or off market so that they're not causing the price spikes. But why have AMC and GME both like followed such a similar trajectory? Is it because it's the same hedge funds routing them through the same dark pools in the exact same time?
Yeah, so it's pretty close. It's the same buyers and sellers. It's the same institutional buyers and sellers. And a lot of the people that so GameStop was the first one to start, and my hat's off to Keith Gill, Roaring Kitty, Deep Effing Value. My hat's off to him, man. He's so sophisticated and so smart at like forecasting that GameStop was going to do that. I mean, that takes like Rain Man ability. I don't know how he did it, but hats off to him. So it started with GameStop. And then people found out, hey, AMC is shorted like crazy too. Like, let's save that company. And so they look the same because it's the same buyers and sellers, not only institutional ownership, but also retail ownership. Like somebody like me, I have both. And a lot of my viewers, they have both. And a lot of people on Reddit, they have AMC and GME. So it's just the same buyers and sellers. And then it's also the same hedge funds. It's Melvin and Citadel, and there's other ones too. There's dozens of hedge funds in the United States, but Melvin and Citadel are the two main ones, and they're both shorting GME and AMC. So it's just the same buyers and sellers. That's all it is.
That makes sense. So, what do you, just before we finish up here, I want to say, first of all, I love that quote that you said, the internet remains undefeated, because fuck yeah, we remain undefeated. That's great. But have you got any predictions, things for people to look out for, and thoughts? So we said the DTCC 005 rule, I think you said, was one that they're still looking to pass. Is there anything else people should be looking out for in the next week or two?
Yeah, for 002 to pass. So NSCC 2021 002 to pass. You also want to look out for the $12.25 level of resistance on AMC. On GME, I haven't pulled it up, but it's going to be similar in proportion. So once we pass 12.25 on AMC, that's going to show some really good strength, some really good positive momentum. After that, the next level of resistance is $14.50. If we get over that, shorts are going to have to cover their positions, some of them, not all of them. And then if we get over $20, I forecast pretty much all shorts will have to cover at that point, because they would just be losing so much money. So that level, 12.25, next level is 14.50, and then keep a lookout for the legislation. And if you want to check it out, I do daily updates on my channel. It's just Jackson Hunter with no spaces. So yeah, we're just waiting for regulation. It's like we've already done all the DD, and not me. There's been many other people that have done genius level ID or DD, excuse me. And so all the DD has been done. The jig is up. Everybody knows it. So we're just waiting on regulations at this point.
That's definitely a sentiment that was echoed in the big DD that was posted a few days ago on Superstonk, the name of which escapes me. But you're 100% right. Shout out to all of the mods on r/Superstonk. You have done a just fucking incredible job. And yeah, there's been a lot of unpredicted rides on this road. I didn't think we'd ever end up with Superstonk. Have you seen that meme? I'll try and splice it in here if I can find it. And it's from Family Guy, and it's that like weird animal that like the animals on Noah's Ark create that looks like a whole bunch of different stuff, and they're like, what is this? And it's like, that's r/Superstonk.
No, I haven't seen that one.
Yeah, I'll put it in if I can find it. But yeah, man, thanks very much for your time. It's been an absolute pleasure. Check out Jackson Hunter's channel. I will put the links, everything we've discussed, in the description below.
Thank you so much, man. Have a good one.
Thanks so much for listening. If you enjoyed the show, please subscribe, follow me on Twitter, or sign up to our mailing list. Thanks a lot to our sponsor, ExpressVPN, the #1 most trusted VPN. Get lightning fast connectivity with servers in 160 locations across 94 countries. Keep your browsing privacy safe with ExpressVPN and get a 35% discount on 12 months of ExpressVPN when you follow the link in the description below. Don't forget my book is now out and available to order on Amazon and on bookshop.org. That's Brexit, the Establishment Civil War. And most importantly, thanks for listening. We'll see you next time.